business owners, professional advisors such as accountants or lawyers. So hopefully after this series, we'll give you some tools and knowledge and help you to get into this market, and in terms to get more business for your practice. So this is the second session for Desjardins Advisor Training Series. Our focus today is talking about the buy-sell agreements. And we, as a financial advisor or insurance agent, what is our role in the business owner's succession planning? And what in the presentation, we're going to also talk about some of the information we would like, as a financial advisor, would like to know more about this client. So before we start the presentation, as Desjardins required, I'm going to read the disclaimer. So basically, this presentation is designed for information purpose only. Neither Desjardins or the presenter actually is intent to engage for the purpose of providing any legal, taxation, or professional advice. We highly recommend you, if you need to have some legal or tax situation you need to deal with, then we highly recommend you to consult your appropriate professional advisors. Okay, so today our focus will be on the life insurance. So we're going to narrow our focus to the buy and the sell, and which are using life insurance as a funding solutions for the client. For the critical illness and disability insurance, I know a lot of times these are the funding options available for a buy and a sell agreement as well. But compared to life insurance, CI and the DI sometimes can be very complicated, and it deserves their own sections. So for today's section, we're going to focus on the life insurance mainly as a funding options for the business owners. Okay, so the targeted audience for this presentation basically is for any financial advisors such as yourself who's interested in getting into the business owners market. So hopefully after this presentation, you will have some information or understanding about the buy and the sell landscape, and what are the opportunities you would like to discover when you have that conversation with the business owner clients, and what type of information as a financial advisor you would like to collect in order to provide the service and to show your value to your clients, especially when you look at working with their professional advisors such as an accountant and a lawyer. So let's have a look at the landscape first. Again, I just want to show you how big is the market. And when you start to have the conversation with your clients, it's important for you to distinguish what type of business owners are they, what do they look like, and probably what type of the topics they will be interested in. Because as you can see, when we get deeper into this presentation, a business owned by a family or a business owned by people from arm's length probably will care about different things. So I would give you some overlook from the top for the landscape in this market in general, specifically for the buy and sell and succession planning. Then we will go into some discussion about the shareholders agreement and buy and sell agreements. So a lot of times people got mixed up with shareholders agreement and a buy-sell agreement. So the presentation, some of the information in the presentation actually will help you to distinguish what is a shareholder agreement and what is a buy-sell agreement. What are the purpose do they serve? And then we will talk about some key provisions you probably want to talk with the business owners, or you want to keep your eye on during the process, you're helping the business owners to develop their succession plan. Then the most important part probably is the sales opportunities, because we are all salespeople. So we're gonna we were gonna discuss what are the selling signals you can observe or during the conversation or during the planning process can make you sell more life insurance during that process. And last but not the least, we will talk about the documents and how we implement that plans with the client. Okay, so let's start with the presentation, have a looking at the business owners market, especially on the buy and the sell insurance market in general. So again, just like the information on the first training session we did in this specific market, this is a highly underserved market. This is highly underserved is because several reasons. First of all, I won't say this is a fundamental, but a lot of times people just don't really put attention, especially for the new business owners, put their attention in this field. They have so many things to deal with. And it is not mandatorily required by the law and the business law to have a buy and sell insurance agreement, buy and sell agreement in place in order to incorporate. So that's one of the reasons people tend to ignore it, at least at the very beginning of their business. And we find some of the other reasons people start to push it back or put it back, just wait for later time to deal with it in their mind, then they push it back forever, is that there is a lot of complex choices the clients needs to choose from. What type of insurance is, what type of funding options available. If people start to think about life insurance and they need to start to think about what's the ownership structure, they have to deal with evaluation of their company value at that time. So a lot of things, they think it's not immediately beneficial for their business activities. So a lot of business owners tends to push it back. But on our side, if we change a view, angle of view from the financial advisors perspective, a lot of times as a financial advisor, you probably will find this is the easiest topic for you to open with the business owners. As soon as, let's say you have a discussion with your business owner's client, you're talking about, start to talking about the life insurance for their mortgage on their personal side. But as soon as you discover that the business owner actually is working with a partner in that business, then you probably can start the conversation with buy and sell insurance, the conversation right away. So it's easier for us to start the conversation, and it's easier for the clients to see the need. In other words, it's easier for us to, get a sell from this market, as long as we know how to deal with the professional advisors the client has, and we have some knowledge to help the client to navigate through that complicated choices. So we probably can get that sell more easily than other more complicated sales ideas. So to make the things a little bit more complicated is that a lot of Canadian business is owned by a family member. By families. So again, we call it a family business. So over 800,000 business in Canada are family owned. So when a family member start a business, they always have this wish. They wish they have a very successful business they build up, and they can. A lot of parents actually is thinking that way. If they're business owners, they're gonna run the business, make it successful, and at some point of the time, they're gonna pass this business to their kids. or one of the kid at least in the family to continue their success in this business. But just imagine, I always use this analogy. If uh, the group of people who's running the business is the same group of people, you probably were sitting on the same dining table at the Christmas dinner all the time. So some of the drama and complications from the Christmas dinner dining table will move to the business boarding room where they have the meeting. So the same type of drama and complication going to happen in the boardroom as well. So a lot of times you will find if the business is family owned, um, our business decision tends to made to beneficial to benefit the family more than the business itself. And on top of that, you probably will find a lot of family-owned business because of the close relationship between the peoples who own the business. A lot of times there is no formal documents in place to facilitate that succession plan. A lot of times it's just words among the family members. And despite the best wish of the business owners, they want to transfer the business from one generation to the next to the next. A lot of times it's just a simple what we call the last people standing type of mechanism in the family-owned business owners market. Whoever is available at that time to take over the business will take over the business. So it actually add complications on top of whatever is already complicated business succession plan. So as a financial advisor, again, when we look at the how to help the business owners to deal with the succession planning, we need to look at whoever is the business owners. If this is a family-owned business, then we have to pay special attentions. Not only on the business side, probably we will distribute some of our focus on how the family relationships and how probably make all the family members sit down to have a formal meeting. So, but having said that, the business owners market for succession planning is still huge. So this is a pretty busy slide, but if you look at all the people who's in this market who actually need a succession plan, it's 92% of the business owners actually express they actually need a succession plan in place. But when you look at all those numbers, like people, even including those informal agreement in place, it's only accounted for about 49% of the business owners actually has that formal or informal agreement in place. Some of the informal agreement even including like they had a chance to sit down, or when they start the business, they probably sit down and talk about this. So we even including that part. So basically, this is a statistic, a market research did in 2018 in November, basically. So it's a quite close research project, and you will see among those 92% people, business owners think they should have a plan in place. Only 49 has that formal, informal. And if you really look, someone have that plan on paper or on some documents, it's only 8%. So again, it's a tremendously underserved market. Really, it's just waiting for us to, as a financial advisor, to get into there and work with the business owners in order to get that business. Okay, so now we had a look at the total landscape of this market in general. Let's have a look at the shareholders agreement and the buy-sell agreement. I find a lot of times a lot of advisors or business owners, they tends to mix this up. People would think shareholders agreement actually equals a buy-sell agreement. Actually, buy and sell agreement is different from the shareholders agreement. Okay, so what to so before we start to talk about the buy and sell agreement or shareholders agreement, what is the role? So basically, as a financial insurance advisor, to what extent we need to understand the buy and the sell agreement or the shareholders agreement. So basically, we're not an expert. We're not supposed to be the expert on the tax or the tax or legal side of the business, but we need to have some knowledge to help us as a financial advisor to facilitate the recommendation as an insurance, as a funding solutions for the buy and the sell process. So as a financial advisor or insurance advisor, we probably need to understand the tax implications on at least understand the corporate tax structure. And we, as a financial advisor, especially, we need to let the client know what the role an insurance plan can play in a buy and a sell provision. So basically, life insurance or other CI or DI, probably in the other sections we will talk about this, is just a type of funding solutions for the buy and the sell provisions. As later in the presentation, you will see a client as a business owner, they have a lot of other options. So as a financial advisor or insurance advisor, we need to let the client know what is the advantage of life insurance policies as a buy and a sell funding solution. And of course, because of the nature of how the life insurance coverage paid to the corporation and how the coverage going to be transferred out of the corporation, it's heavily involved in that capital dividend account scenario. So we need to understand as a financial advisor the impact of the capital dividend account during that succession plan if the client using the life insurance policies as funding solutions. So as a financial advisor, sometimes it is the key that you need to feel comfortable to work with the other professional advisors the client have. A lot of times, probably after you start to work with the business owners or has some start to have some experience, you will see a lot of times the advisor think, the business owner will think whatever a financial advisor presents the solution is a good idea. The first thing they do is they holding this paper, whatever, if it's an illustration or this is a recommendation, they're running towards their accountant and they want to have opinion from the accountant. So it is quite important that you as a financial advisor should be comfortable working with their tax professionals or a lawyer. One thing is that the role of an insurance advisor, it's actually also from my personal experience that the role we're going to play in the succession planning for the client is not a one-point thing. So it's not that we step into the door, we tell the client this is one of the solution. The client find this is a good way to deal with the buy and the sell process, and that they buy into your idea, they buy a life insurance policy. So things actually don't end at there. As a financial advisor, we probably need to go back, visit the client from time to time to help the client to implement that plan. And it's also beneficial for us as a financial advisor, because often you will find after you step into the client's office, maybe 2-3 years after you initially sold that policy to the client to facilitate that buy and sell agreement, their needs actually increase. So we're going to talk about those situations in the later part of the presentation for which is called the opportunities. So we will discuss in more detail in there. But this is the role for, as a financial advisor probably will need to be familiar with or to understand during that buy and sell or succession planning process. So let's look at the shareholders agreement and the buy and sell agreement. So first of all, shareholders agreement is not equal to a buy sell agreement. If you want to really look into the details, A shareholders agreement actually is, I would say, a larger topic than buy and sell agreements. So the shareholders agreement is more of uh, day-to-day management documents the corporation has in place. So it deals with a lot more information than the buy and the sell agreement itself. So shareholders agreement give you a lot of details about how to the company need to manage their day-to-day activities. Uh, Often you will find buy and sell agreement is a part of the shareholders agreement. So now, now we know the difference between the buy and sell agreement and the shareholders agreement. So we probably need to watch our recommendation or the words we use during the conversation we had with the client during that process. We helping the client to put into the succession plan into the place. So a lot of times you will hear, even the financial advisor, we actually mix these two words a lot often. When the clients say, what should what type of documents I should put in place to just list out all those necessary informations for that buy and the sell agreement. Sometimes the advisors or uh, uh, professional advisors even, they will tell the client you should have a shareholders agreement in place. So, uh, so I would say probably we need to distinguish the buy-sell agreement and the shareholders agreement a little bit more clearly with the client. So when we are dealing with the succession planning, most of the time we should recommend to have a buy and a sell agreement in place. But we need to be aware that the buy and the sell agreement a lot of times is a part of the shareholders agreement. So uh, so this is the difference between a shareholders agreement and a buy-sell agreement. So again, if we are only dealing with the succession plan for the client, a lot of times we're dealing with the buy and sell agreement. But a shareholders agreement gives a more broader information about how this company is running from day to day. So it's more of a management rules for the shareholders agreement. So now let's focus on the buy and the sell agreement structure. So when the client decided to have a buy and the sell agreement structure put in place, this is the general structures for the buy and the sell agreement. It's not necessarily related to life insurance policy. Again, even the client doesn't have a life insurance policy to facilitate this buy and the sell agreement. Even they're using other types of funding solutions for the buy and the sell agreement. Still, the structure of the buy and the sell agreement is the following typical three types of structures for the buy and the sell agreement. So the first one, we don't need to really know too much details about this, but those three are the most popular structures in the you can see basically for buy and sell agreement in place in the business. So the first one is usually the lawyer is the one construct all those buy and sell agreement. So the first type is the crisscross method. So what does that mean is the surviving shareholders will purchase the deceased shareholders share from the deceased shareholders estate. Okay, so this is the first structure. Secondly, there is another structure called corporate redemption method. So basically, it's not the shareholders personally buying the shares from the deceased estate. It's the corporation buy the deceased shareholders share from the estate. So again, crisscross is individual shareholders buying the share from the deceased shareholders. Corporation redemption method is the corporation actually as a whole to buy the shares from the deceased shareholders estate. Now the third one actually basically is a mixture of the first and the second method. So we call it a hybrid method. So probably the surviving shareholders actually will purchase a part of the remaining shares from the deceased shareholder's estate, and the corporation actually will step in and buy some of those shares as well. So those are the three most popular buy and sell agreement structures you can see in the market. So again, as a financial advisor, we don't really need to know a lot about this, but you will see understanding the structure of the buy and the sell agreement actually can help us to provide to recommend the right ownership of the insurance policies and type of insurance product we will recommend to the client. So so understanding the buy and sell agreement structure is important for us, but I really don't recommend you to get too deep into this to know the knowledge about like how this agreement going to be structured. This, let's just leave the work to the lawyers. Okay. So the next part of the presentation, we're going to talk about what are the key provisions as a financial advisor we need to know before we make the recommendation for the buy and sell or succession planning for the client, which is the business owners, or some of the information we need to do about the process when we're building that plan for the clients. So first of all, if you started the conversation of business succession planning with the business owner, probably the first thing you need to know is if there is any agreement in place. So if you work a lot more with your business owners clients, you will, please don't be surprised to see actually a lot of business actually don't have an agreement in place with the client. So here I'm going to use one example I actually experienced by myself. You know, one of the product we provide to the clients is the EHP, the executive health plan. One of the recommendations from Desjardins side, if the client decide to have this, is they need to put all those provisions in their shareholders agreement for that, even for that EHP purpose alone. But even there is I work with several business owners. I would say just by a statistic, probably 80% of the business owners actually don't have that in place. So a lot of times the sample shareholders agreement provided from the Desjardins side, we actually include a sample shareholders agreement in our package we can provide through the advisor to the client. They really appreciate it. So this is not something we just drafted by anyone like Mickey Mouse, a person in there. This is actually a sample created by our legal department. So that has all the bare bone needs for the clients. So they really appreciate it. So on the other side, you can see how many business owners, they really don't have that shareholders agreement in place. So probably the first step for you as a financial advisor when you decide to work with the business owner's client is ask them if they have a shareholders agreement in place. And if it is the case, then probably you would like to, if it's possible, to have a read of the agreement. So again, often you will find that there is no agreement in place. And a lot of times you will find that business owners actually has that in place. The lawyer actually drafted it. They just pushed it back. Not all the shareholders actually signed that agreement. And a lot of times, if you read through the agreement in place, you will find that the method that they put in place is not really tax efficient. Again, this is the time if you can have a chance to look at the agreement and you find the mechanism they put in place for the buy and the sell process is not really tax efficient, then this is the time we can step in. That means there is an opportunity for us to make a sell, because most of the time the life insurance policy actually is the most tax efficient way to funding a buy and a sell agreement. And sometimes you will find that there is an insurance, and even the insurance policy is intended for the purpose of buying the sell agreement. Buying the sell process, but there is no agreement in place. So if the client is in that situation, technically, if the corporation is the beneficiary for the life insurance policy, there is no protection for that deceased shareholder. Technically, the corporation can take the life insurance policy coverage and just keep it in the corporation. They just don't need to buy off the deceased shareholders' share in the estate. So you can imagine how awkward is that situation if it's happened. So those are the sample situation you probably will encounter if you have a chance to read the agreement, if there is an agreement in place with the business owners. So this is the first information we recommend you to have when you work with the business owners. The second information to look at is the existing policies the client has. If they have that insurance policy corporate owned, first of all, we need to know what is the purpose for the life insurance policies in place. And secondly, you need to, based on the client situation, to identify that the amount and type of insurance is appropriate for whatever is the purpose for the life insurance. As a financial advisor, we probably need to make sure that the insurance policy in place has no mistaken, in such as the owner of the policy and who is the beneficiary of the policy. So a lot of times when you step into a business and you talk to the owner, you will find more or less they have some insurance, either term or whole life in place. But after you asked the second question, what are the purpose of the life insurance? A lot of them actually just don't know. Even the advisor, whoever sold the life insurance policy to the client, did a pretty good job to explain why that business owner need to have a corporate-owned life insurance. The client tends to forget after 1 or 2, 3 years. So again, this is a time for you as a new advisor, if the client is interested to working with you, to show your value to your client. So have a read at the buy and sell or shareholders agreement, if there is one in place, and identify the information about the existing life insurance policies. Will show your professionalism and your value to the clients. So if you perform really well on that two parts, probably it will give you some boost on the for the confidence on the client side to decide to work with you. So again, this is some part Desjardins can help you. So if you have any buy and sell agreement or existing policies that you need some support to for example, match the amount and type of insurance for the purpose or the needs of the corporation, this is something we can help. So either give me or Melissa a shout. We actually have some special experts in the company actually can help you to deal with that type of situation. So by the way, it is free of charge, and Desjardins actually, me or my colleagues are always available for you to help you on that side. So it's just some extra information. So another key provision to review with the client for that buy and sell process is that we need to understand the effect of death on the shareholders' ownership and the liabilities. And we need to have more detailed information about the ownership of insurance and how the company actually evaluate their value. So effects on death on the shareholders' ownership and the liabilities this part of the information actually can help us to discover more sales opportunities. The ownership of insurance, if we understand that part, we can help the client to create a succession plan, become more tax efficient. And the share valuation is the way we can help the client to determine the right insurance amount for their buy and sell agreement. So those are the three critical provisions we need to review with the client. In other words, as a financial advisor, we need to really get into familiar with the situation before we can recommend a succession plan. So let's go through these informations one by one in detail. So on this slide, you will see we're talking about the effects on death on shareholders' ownership. So again, we highly recommend the client to have an agreement, buy and sell agreement in place, and in that agreement, we need to address the effect of death on on share ownership. So in this buy and sell agreement, the agreement should specify who actually is the buyer for the deceased shareholders' shares. So again, this is the work for the legal advisor. Usually, it's the lawyer's job. They need to determine either the surviving shareholder or the corporation itself should be the owner should be the future owner of the deceased shareholders' shares. And the buy and sell agreement should very clearly list if the buyout is mandatory or optional. So basically, if there's most of the time it should be a mandatory, and if it's mandatory, what is the mechanism put in place to guarantee that purchase process is mandatory? And again, if the client decided to use life insurance as a solution, a funding solution for the buy and sell process, there should be a very clear provision in the buy and sell agreement how does life insurance proceeds going to be used. Again, the final recommendation should come from the client's legal advisor. But again, as a financial advisor, there is a role for you to play to work with that legal advisor for choose the type of insurance and choose the wording in the life insurance life insurance policies. So some of the experienced advisors, if they know the client does not have a buy and sell agreement in place, and the client just purchased the life insurance policy or a couple of them for each one of the shareholders to facilitate that buy and sell agreement. Some of the advisor even will do to this extent, they will deliver the policy or policies in their lawyer's office. So they will have a appointment made to deliver the policy in their lawyer's office. So what the advisor will do is the advisor actually will tell the client, this is the policy for your buy and sell, potential or future buy and sell agreement. And at the same time, tell the lawyer, this is the policy we put in place for the buy and sell process. And as a lawyer, now it's the time for you to construct that agreement. So I'm not recommending every one of you doing this, but it is just showing some of the advisors really care about the shareholders agreement, buy and sell agreement in place in order to facilitate. And this is our kind of obligation to, as a financial advisor, to recommend that the client to have that those agreements in place and tell them what's the impact, what is the disadvantage if they don't have an agreement in place. So the second information we need to review with the client for the key provision of the life insurance, if we are facilitating or recommending that process for the client or using life insurance as a funding solution for the buy and sell process, is we need to know, and the client actually needs to know, what is the effect on death on the corporate liabilities. So a lot of times when we step into the office, we talk about the buy and the sell agreement. The client agree with you. They think they should put something in place for them to facilitate that process. A lot of times they actually ignore when a death happened to one of the shareholder, especially if the death happens to the key shareholder of the corporation. The corporation liability actually will have a big impact on them. So when we talk about corporate liabilities, basically we're talking about the money they borrow from different sources as a corporation. So it could includes the bank loans, the mortgages, the debts for the suppliers, some of the business buying stuff from the suppliers, so they not necessarily pay off the balance. They probably pay off the balance once a year or once of 3 months. So whatever they own those suppliers is the liabilities for the business owners as well. So they have all sorts of liabilities possibly sitting inside of the corporation. And some of the type of the liabilities, if especially when the shareholder passed away, especially a key shareholder passed away, especially let's using a bank loan as an example. A lot of times actually the bank will call the loan because they simply don't have that confidence for the corporation anymore. They probably will call the loan right away. So what's going to happen is when the bank called the loan, the insurance proceeds. In other words, the face amount the insurance company paid to the corporation, they intend to facilitate that buy and sell process, but a portion of the face amount they probably will need to pay the loan off. So there is some risk that the insurance actually is intended for buy and sell agreement will be disturbed by some other obligations the corporation has. So in other words, it's not enough funding for the buy and sell agreements anymore. So as a financial advisor, again, when we step into the corporation's situation and start to recommend a buy and sell using life insurance as a funding solutions for buy and sell agreement, a lot of times we need to look at the corporation liabilities as well, because we have to remember that a lot of corporation liabilities actually would jeopardize the funding from the life insurance policy proceeds to used as it intends to be. Okay, so these are the part of the key provision we need to review on the topic of effect of a death on corporate shareholder. So the last but not least is the credit insurance. Again, we just talked about in the previous slides. The liabilities or the obligations that a corporation to repay those liabilities actually sometimes will jeopardize the insurance proceeds purpose to facilitate that buy and sell agreements. So again, we have to have some special attention on that part. So as life insurance, if the client choose insurance policy as a funding solution for the buy and sell agreement, we recommended the client to have additional insurance coverage to deal with that liabilities, especially if the financial institute actually request a life insurance, or they agree to use the life insurance as some of the guarantee for their loans or proceeds of the liabilities, then there will be a tax benefits for the client. So remember, if during the first training session, we actually talk about a lot of client as a business owner, they probably among the first questions, some of the first questions they're going to ask you is, is my life insurance premium deductible for my business as a business expense? We actually went through those informations in the first training session that there is very specific condition that the client actually can claim part of the premium as their business expense. So if the client actually take that advice to use the life insurance as a guarantor or part of the guarantee for their business loans, and the bank actually asked for it, or they actually agreed with it, the client, in that specific situation, the client actually can deduct part of the premium up to the net cost of pure insurance as their business expense. And the interest of the loan is deductible for their as their business expenses as well. So by recommending insurance as a guarantee or potential premium deductible product available for the client, you are providing the client a very tax efficient way to deal with that type of situation. So, but again, the assignment of the life insurance policy is required. If it's required by the bank and you have that assignment agreement signed with the bank, is the requirement for, so this is necessary in order for the premium to be deductible as a business expense for the business owners. So again, there is a potential that the client actually can save some money on that side as well. Okay, so so this is the effect of death on the corporate liabilities. Again, we were talking about this, I touched briefly in the previous slides. So there could be a situation happen is if the life insurance policy is intended for the buy and the sell agreement, and the insurance company actually fulfill their obligations when the shareholder passed away. They gave the full face amount to the corporation. So the proceeds of the life insurance coverage actually is paid to the corporation. Now, if there is some liabilities existing in the corporation, one example is the bank loan repayment, then there is a risk that part of the life insurance policy actually will be used to the proceeds, the coverage actually will be used to repay the bank loan. So there is a risk of shortfall in buying the sell agreement to facilitate using life insurance proceeds to facilitate that buy and sell funding. So again, this is the opportunities for the financial advisors such as you and me to discover more sales opportunities. Okay, so the second key provision, part of the category of the key provision, we need to have to review or understand or get more information from the client is the ownership of the insurance. So we need to properly address these points properly. So we need to see what is the owner and the beneficiary of the life insurance policy. So the client actually has a lot of choices. They can actually choose individually own the policy, and it still can be used to facilitate that buy and sell agreement between the shareholders, as long as the surviving shareholders fulfill their obligations. They also can choose the owner, the corporation as owner as their life insurance policy. And then you have to be very careful about the beneficiary of the life insurance policy. So what we recommended is if the corporation is the owner of the life insurance policy, then most of the case, the corporation should be the beneficiary of the policy. Otherwise, there could be a large tax obligations in there. I'm gonna tell you a story. Again, this has happened to me. I actually gained a client that way. So again, the second thing we probably need to pay a lot of attention on the ownership of the insurance is we need to identify who is the premium payer. So Again, it really depends on who actually is the owner of the life insurance policy. So one example is if the individual is a life insurance policy owner and the corporation is the payer for the premium, then potentially there is a tax inefficient way to put this structure in place. That means there is a large tax or there will be a taxable benefits for whoever is the owner of the policy at that point of the time. So we have to be really careful about the structures. There is a way to get around it. The premium still can come out from the corporation to pay for the premium if it's individually owned, as long as the corporation actually put that whatever is the amount for the premium payment as taxable income for that owner of the policy, then that potentially large tax liabilities down the road will disappear. Okay, so the other important information for the agreements to address we need to know from the business owners is that the shareholders, whoever is agreed to using the life insurance as a funding solutions for buy and sell agreement, needs to consent to medical examinations. So a lot of life insurance policy, in order to put it into place, the life insured needs to go through the paramedical or medical exam process. So it is critical that in the agreement we should very clearly address that whoever is the intended life insured will be agreeing to go through the medical examinations. And as a financial advisor, we need to recommend that the client to have these clauses in the agreements, or we need to understand at least if the life insurance proceeds paid out to the corporation, if it's more or less than the buy and sell agreements demanded, what's going to happen in that situation. So those are the information. Again, it's critical and important for a financial advisor, the key provisions for the financial advisors to review if they have any agreements in place, or if we're recommending them to construct the new agreements. Those are the important information in that agreement. Okay. Oh, sorry. By the way, I actually left out one point on the last. So it's also important to very clearly list it on the agreements, like without all the shareholders' agreement, the corporation should not do anything into the life insurance policy. One example, if it's a whole life insurance policy, then without the agreement with all the shareholders, they shouldn't use that life insurance policy as a collateral to borrow money against it. So only all the shareholders agree to that, then they can do anything to the life insurance policy. So this is important for the agreement as well. Okay, so that actually concludes the second category of the important provisions in the agreement, or for the new agreements to construct. The third category of the important provisions as a financial advisor need to be aware with, and you need to pay some special attention is, and this also help you to discover more sales opportunity, is how to evaluate the value of the company. So so the logical is simple. The life insurance policy is the funding solutions for the buy and the sell agreement. So first of all, we have to determine what is the value for the deceased, potentially deceased, the shareholders share, the total value of the deceased shareholders share. So that actually involves how we evaluate the value of the company. So there is a different valuation mechanisms we can use. Again, this is more for the accountant to determine. But as long as we are aware of this process or mechanisms, it will help us as a financial advisor to discover more, as maybe more. A lot of times, there's more opportunities for the sales. So, the first mechanism is what we call as a cash flow multiple mechanism. So, what we are using is we're using what is called the EBITDA, TDA, the earnings before interest, taxes, depreciation, and amortization. So this is the cash flow. Usually, the way the accountant will use is they will time a range from 3 or 6 times of the whatever is the EBITDA amount for the corporation to treat it as a value of the corporation. So if the accountant determined this is the mechanism they need to use to determine the value of the corporation, then let's say they have 3 shareholders. So whatever the amount they come up with divided by 3 probably is the right life insurance amount for the each shareholders to put in place to facilitate that potential buy and sell agreement. The second mechanism they can use is asset-based. So whatever is the book value basically is the total assets the corporation is owning. When we look at the balance sheet, so the total value of the company divided by whoever, how many shareholders available, probably, or also depends on how much, what's the percentage of the shares that each shareholders own in the company, will determine the share value of the shareholders, and in terms determine the life insurance amount we need to recommend it. The other way is a discounted cash flow. So if we know how much is the cash flow down the road for the life of the corporation, then we can discount the future cash flow to determine the value of the corporation. And the last but not least is the fair market value of the corporation. So again, this is important for us to working with the professional advisor. In this case, is the accountant to determine the value. You probably will find out if you work more with the business owners in this market is that the more you work with the accountant, the more familiar yourself with this how the mechanism of the value determination process will help you to get more sales, especially when you it will help you to determine more face amount you need to provide to the client for that buy and sell process. Okay, so again, when we help in the process of determine the value of the and in terms to determine the face amount we need to provide to facilitate that buy and sell agreement, we also need to understand what is the ownership and what is the situation for the ownership of the policy, or how the corporation actually is deal with using that mechanism to determine the value. So again, this is something we need to leave to the accountant to determine, but just for the information for us, like I said earlier in the presentation, a lot of business actually is owned by a family. So what we need to know is if it's a non-arm's length or there is arm's length transfer of the shares, or it will actually affect the tax purpose a lot. So I don't want to get really a lot detailed into this mechanism or this information. But as a financial advisor, we probably need to know or have that in our mind that we have to understand if the share transfer is happening between the arm's length, in other words, non-family members or the family members. The tax treatment for that two types of transactions will be different. Especially in the CRA's eyes, if it's arm's length or non-arm's length, if it's between in other words, if it's between the family members or non-family members, they will use different value to determine the share transfers. So again, this is a largely we need to dedicate it to the accountant to deal with that type of situation. But as a financial advisor, we just need to know if the transactions is happening during between that different types of shareholders actually will determine what is the tax outcomes for those transactions. Okay, so the following section of the presentation actually give you some of the examples, some of the common errors you will see from the buy and sell agreement. So it's just some of the examples. What we want to explain that to you is that although the accountant and the lawyer, they are the experts in their field, but a lot of times they just don't have enough trainings on the insurance side. So a lot of times something you look at, it's normal, logical in the buy and sell agreements actually will cause problem down the road. So this is the first example I want to show you. Is that this is actually all come from the real life examples. In this buy and sell agreement, the lawyer actually constructed set this clause in the agreement. The corporation will own policy number 123456, issued by Empirical Life on the life of shareholder 1, and the policy number 654321, issued by whatever the life insurance company on the life of shareholder 2. Okay, so what we find that the problem for this clause in the agreement is that first of all, the policy number is not correct. Secondly, we find on the shareholders agreement, there is a mismatch of the policy and the shareholder. And third, the name of the insurance company actually was not correct in that buy and sell agreement. So again, we just want to give you a real life example. Although the lawyer is the expert in his field, not necessarily he has a very good idea of the life insurance industry. Okay, so this is another real life example for the agreement, the word in the agreement that we find could cause some problems down the road. So the clause on the shareholder agreement is that the share purchase price will be equal to the insurance proceeds received by the corporation on policies it owns on shareholder 2's life. Okay, so this is quite obvious. So the lawyer actually make it reverse. We actually should provide the life insurance coverage according to the value of the shares need to be purchased. But in this clause, actually, the lawyer is saying whatever is the life insurance policy proceeds, doesn't matter if the company become more successful down the road and the shares has more value. Whatever the life insurance proceeds, coverage proceeds will determine what is the value of the future value of the shares. So obviously, this part of the clause is really not appropriate and it potentially cause huge problems for the buy and sell process down the road. So again, the lawyers is very good in their field, but probably the life insurance trainings is not necessary enough for them. Okay, so so we talked a lot about the key provisions in the shareholders and the buy and the sales agreements, and what we need to pay special attention to as a financial advisor during that recommendation and planning for the client for the succession plans. Now let's have a look at the sales opportunities we'll present to you when you start to work with a business owner in that market. So we would like to use a case study using as an example to show you how you can discover the sales opportunities when you work with the business owners. So we're still using that case we used for the first presentation. So there are two brothers. They're the owner of the ABC Wholesaling Incorporation. So Daniel 43 and Mark 47. They Mark married with Karen, and Daniel married with Jessica. They each of the brothers actually own 50% of the OpCo, the operation company. And for this company, let's assume that Daniel actually dies, and Jessica actually inherited. If there is no buy and sell agreement, Jessica is the first one in the place to inherit Daniel's shares, which is the 50% of the shares of the OpCo company. And what's going to happen is that Jessica has no idea about what's the selling process, or has no experience on any wholesaling business. So naturally, Mark started to develop a lot of conflicts with Jessica. And in terms of the business actually go down, and their credibility actually get hurt in this industry. So that's what could happen if there is no buy and sell agreement in place. So the solution we can provide to the client is we probably can have 2 life insurance policies in on the Daniel and the Mark to facilitate that necessary purchase of the share from the inheritant, which in this case will be Jessica and Karen. So the one who is really the expert in the wholesaling can continue to run the company without any destruction. So the first opportunity we want to discover is the buy and sell funding, obviously. So we need to explain to the client. Sometimes the client actually will ask you these questions. So why don't we just using the other funding options available for me to facilitate that buy and sell process? Why I have to use that life insurance? So usually the other funding options available for the clients is borrow the money from the bank, or sell some assets in their corporation in order to generate that proceeds to buy off that shares from the deceased shareholder. Or the last but not the least is purchase the life insurance to provide the funding for the client to be needed. So life insurance, again, as a financial advisor, you know this is a lot of times the most cost and the tax efficient way to facilitate that buy and sell agreement. But you need to explain to the client what's going to happen to the client if there is other options available. So let's assume that the client actually needs to liquidate some assets in order to generate the cash. So we are using if the client is decide to liquidate, like sell some of the assets and generate the cash. First of all, the first thing they need to face is about 50% of the tax rate, even for a corporation. If this is a capital gain income for the corporation or other investment gains in the corporate. So this is not really efficient. So the client liquidate $1.335 million. After the tax, they only can get half of the proceeds as the proceeds or cash available to facilitate that buy and sell process. And it's not tax efficient. So by comparing this way in the life insurance, if you really crunch the numbers, a lot of times it's obvious for the client to choose the life insurance options available in order to, instead of choosing this one. Borrow to facilitate that buy and sell. A lot of times is you don't know what is the interest rate. A lot of times it actually will cost the client more to using this way to facilitate that buy and sell. And not mention that if there is a key shareholder passed away, I don't know how many banks actually will at that point of the time will agree to pay out such a big proceeds to help the client to facilitate facilitate that buy and sell process. A lot of times, the bank not only won't give you more loan, they probably will call the loan already proceeded to the corporation because of the key shareholder passed away. So again, a lot of uncertainty is in the air for this type of process. So that actually leaves to purchase a life insurance, the most cost and the tax efficient way to help the client to deal with this situation. Now, remember when we talk about the sales opportunities earlier in the presentation, we talk about we probably not only need to look at the client's share value, we actually need to look at the corporate liabilities at the same time. So let's assume in this case, the company, the ABC wholesaling company actually has some liabilities in their corporation. And as a financial advisor, we need to help the client to deal with that type of liabilities as well. So let's say the client, the corporation actually owns 1 million contract on Daniel's life to purchase that shares by Mark, and an uninsured bank loan has 400,000 balance at the upon the death, and the bank actually decided to call the loan because of the shareholder's death. So intentionally, that $1 million is for the purchase of the deceased shareholder's shares, but because of the bank called the loan, there is a 400,000 short for the share purchase. So again, this actually give us more opportunities to sell more life insurance policies for to deal with that type of situation. So we actually can ask the client to increase their life insurance policy by 400,000 coverage. So just in case that type of situation happen, that extra 400,000 can deal with the recall of the loan, and the rest of the $1 million is more or less enough for the client to deal with the buy and sell process. And the other sales opportunities, again, like I said earlier, the process doesn't stop when you sell one life insurance policy to the client. As a financial advisor, we need to go back to visit the client from time to time. In other words, actually, the sales opportunities existing for the life of the business. Because if the business is successful, then the value of the corporation actually will increase. So in terms, whatever the percentage, the amount of the share the business owners own through the corporation actually will increase the value as well. So when we, let's say, go back to the same client after 5-10 years, if the value of the corporation is increased, and on the other hand, the client is getting older, so more likely the premature death going to happen. Probably the client will see more needs for the buy and sell life insurance to put into the place. Then we can get more opportunities to sell more life insurance coverage, just because of the value of the company actually increase. So if you have a good relationship with the client, establish your value with the client, the buy and sell sales opportunities actually existing throughout the life of the corporations. So you can always go back to the client and revisit the value of the corporation. So you can have that increase the sales opportunities there with the client. So this is our a list of the Desjardins products available for the client for buy and sell life insurance. So most likely for buy and sell agreement, most of the accountant or a lawyer will recommend a term insurance for, especially for the accountant, they will recommend a term life insurance to facilitate that sell, buy and sell process. So we have all those a whole suite of term insurance available. We have turn 10, turn 20, turn 30, turn 265. But just in some case, if the client is looking for whole life, then we have the whole suite of whole life products and the universal life or participating life insurance policies available for the client for them to choose from. Oh, by the way, we actually will announce a new upgrade for our participating whole life. The upgrade will on two parts. One is we most likely will have a new 10-pay product. So it's a shorter payment period, and our dividend interest rate actually will increase quite significantly. So we are expecting a new announcement by the end of November. So please stay tuned for the new announcement of the upgrades of the participating policy. Okay, so here is the part of the key documentation we need to, as a financial advisor, need to pay special attention to when we are working with the client for the buy and the sell and succession planning. So shareholders agreement, again, this is shareholders agreement, and a buy-sell agreement is critical documents we recommend the client to have in place. And again, a buy and a sell agreement could be a part of the shareholders agreement. Updated the wills and updated power of attorney, and these are the documents important for the clients, especially for the business as well, business owners as well. So those are the documents we recommend the client to check from time to time. The following are the sum of the documents we have available through Desjardins to help you to determine what's the needs and what to determine the needs or the value of the client's share value or their life insurance needs. So those are the forms available. So by the summary, the buy and the sell agreement, buy and the sell life insurance policy market actually is a huge market for you. And again, you need to we need to become comfortable with the professional advisors for working with the and working with the business owners to recommend them the right amount and right type of insurance to facilitate that buy and the sell fundings. Okay, so at this point of the time, I need to unlock the audio and just if you have any questions, just give me a second. Let me unlock everyone.
Yeah. Thank you, Julie. I think if anyone have any question, can you send an email to us, and then we'll forward to Julie. And I think it's a great session. We learn a lot, and I think it's a great idea that after we can always review what we learn, and then we apply it to the when we see the business. There is a lot of opportunity because it's not only the business owner, professional owner, corporation is all apply for this type of plans. The reason is because, for example, dentists, a lot of them have a partnership, something we can look into it. Thank you, Julie, for helping us today, for getting all this information, and it's very important. And and if anyone have any question, please feel free to reach out to us, and then Julie will able to facilitate all the requests. Okay, thank you, Julie.
And I think if there is no questions, then we should talk about the campaign, right?
Yeah.
Okay, so if I'm not right, please correct me, Amy. So I know there is a campaign going on, so it's an exciting time. It's the end of the year already, so we want to run a Desjardins sales campaign to help you to looking for more opportunities for selling the Desjardins product. So so the first campaign part of the campaign is that from now to the end of the year, if there is any sales of the Desjardins product, and down the road, if it's that the sales is issued, then for each of the policy, we will have a is it $25, Amy? If I'm right?
25 apply and place, and then we have $25 extra, and also like the best of the whoever have the highest FIC, we get $500, right?
Yes. Yeah. Yeah.
Okay.
So yeah. So I believe there is a flyer Taro can send out to every advisor, associate advisor for the details of the campaign.
Mhm.
So we have two types of rewards. One is ongoing. So any policies submitted and placed will have a gift card.
Yeah.
It has nothing to do with the premiums, basically. And the
Yeah.
second is that by the end of the year, we will look at all those total placed the premiums. Then the top ones actually will have a reward for that too. So again, this is an exciting time, and I know this is a special year. We all went through a lot, but for the last 1.5 months, I guess, we will just want to give you some fun and some excitement to work with Desjardins, and hopefully we'll get a lot of sales from you guys again.
Thank you, everybody. I think I love the Jordan policy. The children CI is one of my favorite, and the EHP another favorite. And also they have hybrid plan that you can do the life and the CI together. Okay, so look at that and call Shuli. He's very patient and he will go through with us if you have any question. Okay, thank you. Have a good sales.
Thank you. Thanks. And thank you again for attending the session.